Hey guys, today I'm going to be breaking down DoorDash taxes and how much you need to save back for them. A lot of people think this is a really scary thing, but it really doesn't have to be, so I'm going to do my best to simplify it for you so that way you can just focus on making that money. Now, before we jump into that, of course, I want to give a big disclaimer that I am not a tax professional and that you should take all of my advice with a grain of salt. I could even get some things wrong, but this is based on all of my personal experiences, my research, and specifically the numbers that I'm working with are my brothers through TurboTax and their articles as well. So I'll be throwing those things up on the screen as we talk about them, but again, take it all with a grain of salt. All right, so with that out of the way, I just want to do a quick overview. And the first thing is you have two options when it comes to deciding how you want to do your taxes. And if you're just getting into this, you're probably going to want to do the standard mileage deduction. It's a lot easier and most people save more money this way versus the itemized way. You have to keep track of everything and it's manual, a lot of extra work. There are very rare cases where if you do itemize everything and keep track of it all, you will actually save more. But in most people's cases, you should just go with the easier way, save you time, and in most cases, again, you'll be saving more money. Now, the next thing is that there's actually a couple of different taxes that you need to worry about. One is federal income tax, and the other is self-employment tax. Since we are independent contractors getting 1099 tax forms, then we have to pay into Social Security and all that stuff ourselves since we're technically our own business. And usually when you have a W-2, that gets split between you and the employer. That's why they are withholding taxes from your paycheck, and that's where that goes. We have to do that all ourselves. So I'll get to that in a second. But first, with the federal income tax, that is broken down into brackets. So for example, you're taxed at 10% on your first, I believe it's about $10,000. I'll have a chart up here. And then for the next amount of money, it goes to 12%. And then after that, it's 20 and 22, I believe, and so on. Now, a big misconception with this is that if you make just over the threshold, that your entire amount that you made is taxed at the higher percentage, and that is incorrect. How it works is if you make just say $1 more than the threshold, that $1 that is over into the next bracket, that will be taxed at the higher percentage. So if you're going from the 10 to 12%, only the $1 extra will be taxed at 12%, and the first big chunk is still only taxed at the 10%. And again, I got a big chart here, and then it kind of shows you here how that works just in numbers rather than percentages. So very good tool there. So getting back to the self-employment tax, how that usually works is if you're at a W-2, again, you are splitting that with your employer. So they withhold the half of this 15.3%. So you're paying 7.65% out of your paycheck, and then they cover out of their pockets the other 7.65%. Again, we have to cover all of that ourselves, being self-employed. DoorDash doesn't do that for us, so this is why we have to save back our own taxes. However, the government realizes that we're kind of at a disadvantage with that, so they gave us an extra deduction that we can take advantage of, where half of what we pay of that 15.3% self-employment tax is deductible. So that taxable income is less, and you'll have to pay just a little bit less. And that's pretty confusing, but I'll get into the nitty-gritty with that with the example of AJ's numbers in just a minute. But I did want to just emphasize a point here that this is a big misconception with a lot of people doing their taxes, is that these two are separate. So when you're doing your deductions, when you have that standard deduction, you are going to decrease the amount that you're getting taxed from your federal income. However, you are still liable for the full 15.3% self-employment tax. That is not getting deducted from your expenses, like your mileage when you're tracking those, or whatever, if you're doing the itemized version, that only goes towards the income tax. Your self-employment tax, the only deduction you get is, again, that half off from the 15.3% that you paid into it. With that all covered, I'm going to start jumping into AJ's, my brother's, specific tax numbers, and we'll kind of walk through it that way. So his situation was very easy. He was only working for about a month before the new year rolled around. He made $1,951 and he drove 1,352 miles. So now here's the thing. He didn't really even need to track his miles because the deduction for mileage for the second half of the year, which is when he drove, was 62.5 cents per mile, which comes out to $845 that he can deduct from his income, so that way he's taxed less on the remaining. However, he can also take the standard deduction that everybody gets, even if you are working a W-2. And for 2022, that number was $12,950. Now, obviously, he doesn't even come close to that. So that means he doesn't have to pay any federal income tax. But as you can see here on the screenshot, he still owes. So why is that? So now we roll over to the self-employment tax. And again, this does not fall under the deduction. So you are going to have to save back money no matter how many miles you drove. You cannot deduct against that, except for a little bit, and I'll get to that. So for his self-employment tax, we take his income, $1,951, and we multiply that by the 15.3%. Well, that comes out to about $298. But TurboTax only says he owes $275, so it's up. And again, this is where that deduction comes in. So half of that, about $150, can be deducted from the 1951. So doing that math brings his self-employment taxable income down to only $1,801.75. So now we take that number and multiply it by the 15.3%, and we get $275.66. Of course, TurboTax just kind of rounds it down a little bit, and that's all right. So he's all set. Of course, there is state tax, but I'm not even going to cover that because honestly, I don't really understand where they got the numbers. Apparently his taxable income there is only like 800 something. So I'll do a deep dive on that later when I do my personal taxes, but it's also very specific to each state anyways. So I just recommend saving an additional whatever percentage that is. And it'll probably be a little less, so you'll just be getting, extra savings that you're putting away for later. So now you know how to do taxes, how to do the calculations, and of course, if you go through TurboTax, which DoorDash has a discount on, just going through them, I believe it's like $20 off or something, then you can understand how they're doing it. And with that, we can actually see what our effective tax rate is, not including state taxes. It's just about 14%. That's how much he really only needed to save specifically for taxes. Now, personally, I would recommend still putting away 20% of your gross income. Everything that comes in, 20%, just put it in a different account. If you cash out or whatever, just put it in a separate drawer or something, so that way you have it specifically for taxes and you have a little extra. Maybe that'll come back to you as a tax return, or you can use it for car maintenance and things like that that are going to pop up more frequently because you're driving more. So again, I just wanted to emphasize the main point of this video, that when you do your deductions, it does not reduce your taxable income for the self-employment tax. It only reduces your federal income tax. So that 10% or 12%, or if you're making like big bucks, 20, 22% or more, that is what is reduced because of your mileage and the standard deduction that you can stack. You can stack those. But when it comes to self-employment tax, that is separate, and you only get one deduction on that, which is half of how much you would pay from that, if that makes sense. If it doesn't, watch the video again and it'll eventually clear up. So big thanks to my brother for allowing me to use his tax information. I will be doing my own taxes as soon as my W-2 gets in from my old job. So that way I can cover a more complex situation where I've driven a lot more miles on both halves of the year, since that split was separate with how much you get to deduct per mile, as well as having a W-2 and like 4 different 1099s put all in there. And I'll probably just do like a full video recorded of me doing the whole process through TurboTax, so that way you can see every step. So yeah, if you do want to see that, then make sure to subscribe. If you found any value in this video, or if you have any questions, comment down below, give a thumbs up, and follow me for more. Thanks again for watching, and I'll see you in the next one.